The best MACD, stochastic and RSI trading strategy for beginners that no one ever told you. This video provides a clear, winning, step-by-step guide to how to successfully trade in the forex and stock markets or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the MACD, stochastic and RSI indicators. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. A stochastic oscillator is a momentum indicator comparing a particular closing price of a security to a range of its prices over a certain period of time. Just like MACD, stochastic also has a faster moving metric and a slower moving metric. The general theory serving as the foundation for this indicator is that in a market trending upward, prices will close near the high, and in a market trending downward, prices close near the low. And hence in a range of 0 to 180 or higher is considered as overbought, indicating an upcoming downtrend. While 20 or lower is considered to be oversold, indicating an upcoming uptrend. There are two lines you should be aware of in the stochastic tool. The K line, or red line, represents the closing price, while the D line, or blue line, is the moving average of the K line. The stochastic should be your main entry signal. The ranges the lines are bound in are important metrics to see if the asset is oversold or overbought. When the K line, or red line, drops below 20, it indicates a buying or long signal, as the asset is oversold. Similarly, when the K line is above 80, it's time to sell the asset as it is overbought. The stochastic can be used alone if you just buy in oversold regions and sell in overbought regions, but brings you a low success rate. RSI for trend confirmation. The Relative Strength Index, or RSI, is a technical indicator used in the analysis of financial markets. It is intended to chart the current and historical strength or weakness of a stock or market based on the closing prices of a recent trading period. One of the most popular tools used in trading, a popular way of using the RSI trading in the overbought and oversold regions. But we already have the stochastic for that. So in this combination of tools, we use the RSI for trend confirmation. What I did was change the settings within RSI into one single line, on the 50. J. Wells Wilder wrote that chart formations and areas of support and resistance could sometimes be more easily seen on the RSI chart as opposed to the price chart. The center line for the relative strength index is 50, which is often seen as both the support and resistance line for the indicator. If the relative strength index is below 50, it generally means that the stock's losses are greater than the gains. When the relative strength index is above 50, it generally means that the gains are greater than the losses. So, anything above the green line, or above the 50 level, would be a buy signal because it is an upward trend. On the other hand, anything below the 50 level shows the price on a downtrend, so you would take a sell position. Remember, there are many ways to employ the RSI indicator. For this demonstration, we are using it as a trend confirmation. MACD to detect price momentum. MACD, or Moving Average Convergence Divergence, indicates price trends and market directions, a momentum indicator. It is formulated by subtracting the 26-day moving indicator from the 12-day moving indicator and its price. The common strategy to use with the MACD is through crossovers. Circled in green, you would want to take a buy signal when the MACD line, or red line, crosses over the signal line or blue line. On the flip side, take a sell position when the MACD line crosses below the signal line. However, this only works in trending markets. When the market is moving sideways, the MACD often gives false signals. For this set of combination tools, we are not looking at the MACD crossovers. Instead, it is a third layer of confirmation to ensure the momentum of the market is on our side. Entry for a buy signal. Step 1. Look at stochastic, then make sure both K and D lines are in oversold regions. Step 2. Use RSI to confirm the upward trend by making sure it is above the middle line, 50. Step 3. Use the MACD to confirm the upward movement. You have to make sure the MACD line crosses above the signal line. Step 4. Ensure that both of the stochastic lines has not hit overbought levels yet. Step 5. Take a buy or long position. Entry for a sell position. Step 1. First look at stochastic, then make sure both K and D lines are in overbought regions. Step 2. Use RSI to confirm the downward trend by making sure it is below the middle line, 50. Step 3. Use the MACD to confirm the downward movement. You have to make sure the MACD line crosses below the signal line. Step 4. Ensure that both of the stochastic lines has not hit oversold levels yet. Step 5. Take a sell or short position once all rules are met. Exit strategy. You would want to place your stop loss at the nearest swing low, while if you took a long position. If you are in a short position, you would want to place your stop loss above the nearest swing high. The best traders need to incorporate risk management practices to prevent losses from getting out of control. However, trading always varies from individuals. This could be based on the individual's risk tolerance and appetite. My rule of thumb suggests that you should never put more than 1% of your capital or your trading account into a single trade. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the MACD, stochastic and RSI trading, to fully understand this wonderful strategy and to make the most out of it. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.